Hey everyone, it's Bavi here, and today I'm here to explain the stock market for teens and other beginners. I'll put timestamps in the description and they will be on the video so that if you already know one topic but you don't know the other topic, you can just skip to the other topic. Real quick before the video starts, I would very greatly appreciate it if you can take just 3 seconds of your time, go down below, like the video, because these videos actually take a lot of effort and time to create. So if I get 20 likes, I'll do absolutely anything the top comment says. Now that I've begged the likes, it's time to get straight into how the stock market works. Let's start off with what is the stock market. The stock market is nothing more than the giant global network that organizes a marketplace where huge sums of money are moved back and forth every single day. If you've ever wondered just how much money is traded every year, it's a lot. In fact, it is $1.3 quadrillion. That's quadrillion with 15 zeros. That is 16 times more than the total value of all goods and services in the entire world economy. However, it's not just bananas or poorly printed shirts that are traded on the stock market, but predominantly securities. Securities are the rights to assets, mostly in the form of shares. A share stands for a share or a piece in a company. But why are shares traded at all? Well, first and foremost, the value of the shares relate to the company behind it. If you think of a value of a company in terms of a pizza, the bigger the overall size of the pizza, the bigger each slice is. For example, if Facebook greatly increased its profits with the new business model, the size of the company's pizza, aka value, will increase, thus increasing the value of each slice, aka share. This is obviously better for the shareholders who bought it before the increase in value. For example, they could have bought it at $38 and sold it at $50. Once it's sold, the profit comes out to $12 per share. What do companies gain from being on the stock market? Let's use Facebook as an example again. What would Facebook gain from people buying its shares? The company can raise funds by selling its shares, allowing them to invest or expand their business. Facebook, for example, has earned $16 billion just from selling their shares. However, the trading of shares can frequently be a game of chance. No one can say for sure which company will perform well and which will not. If a company has a good reputation, investors will back it. A company with a poor reputation or poor performance will have great difficulty selling their shares. Unlike a normal market where when you buy something you can touch it and it's tangible and you can take it home, the stock market only sells virtual assets. They appear in the form of share prices and graphs on a monitor. These share prices can rise and fall within literal seconds. Therefore, shareholders have to act quickly in order to not miss an opportunity. Even a small little rumor can result in the demand for a company decreasing. Of course, the opposite is also possible. If a particularly large group of people, like Wall Street bets for example, buy weak shares because they see potential, their values will rise as a result. In particular, young companies can benefit from this. Even though their sales might be falling, they can sell their shares on the stock market to get some extra cash flow. In the very best case scenario, this will result in the company taking their idea and making it become a reality. In the worst case scenario, this will result in a speculative bubble filled with hot air. And in the case of all bubbles, they will one day burst, aka in the case of all stocks with a bubble around them, they will eventually fall. The value of 500 large American companies is summarized in what is known as the S&P 500 index. The S&P 500 shows how well or poorly these huge companies and thereby the economy is performing at the very moment. Stock markets in other countries have their very own indexes too. All of these markets together create a globally networked marketplace. All of this information was very vague and simplified for beginners, so if you guys want to see a video series where I go step by step in each of these topics, please let me know down below in the comments. Be sure to comment specifically which topic you would like to see so that I know which videos I should make first. Before you guys leave, I have one very quick message, so please listen. Just 6 months ago, I knew absolutely nothing about the stock market or finances. It was then where I was fortunate enough to stumble across YouTubers like Biaheza and Graham Stephan. These YouTubers inspired me to start learning about financial education. Now, after 6 months, I can finally say I'm very happy with my research and the knowledge I have gained from researching all of this. I made my channel so that I can help other teens just like me achieve financial stability and become financially secure in the future. If that's something that even mildly interests you, please go and check the subscribe button. Even if you think you're subscribed, sometimes you're not. Give it a good hard look and please consider subscribing. It costs you literally nothing to subscribe except a few seconds of your time. And you get free knowledge put into a lot of informational and entertaining videos. Thank you so much if you watched to the end, and thank you even more if you went and actually liked the video and subscribed. It truly does mean a lot. Every single like, comment, subscriber means a lot to me, especially at the starting phase. Whatever you comment, I will 100% see it, and 99.999% of the time I will reply, unless it's just like a bot commenting. Anyways, that was it for the video. I hope you all learned something and enjoyed. Get this video to 20 likes, I'll do whatever the top comment says, and that's it for the video. Avi out.